The Union Budget on February 1st announced that the government will create a National Financial Information Registry. Now, this can be as revolutionary as the creation of Aadhaar itself. What's the NFIR? Think of the NFIR as a 10x version of, say, a CIBIL. A CIBIL, or any credit information company, has all the credit information of an individual borrower or a company, based on which banks can give more loans to that borrower, to that company. But CIBIL doesn't have information on, say, bonds, intercorporate deposits, cash balances of the company, and such other financial information. So the Reserve Bank in 2018 had mooted the idea of a public credit registry, which will be a state-owned entity with all the credit information of a borrower, not just loans. So these would include loans, repayment history, bonds, market borrowings, that is, ECBs, bank balances, etc. This registry is still in the draft stage despite some rounds of committees. Now, meanwhile, the government has proposed this NFIR, National Financial Information Registry, which can contain both credit and non-credit information. See, it's financial registry. That is all financial information of any company or borrower. So RBI, banks and NBFCs and insurance companies can give data on credit, on loans. The MCA can give credit on corporate balance sheets, that kind of data. The SEBI can provide promoter and shareholding data. The GST network, GSTN, can give GST data of the company. Tax departments like CBIC and CBDT can give tax history, direct and indirect. The CERSAI, the Central Registry of Securitization and Asset Reconstruction and Security Interest, there's a body like that, that can give data on securitized assets. In short, the government and lenders can get a 360-degree perspective of a borrower. That's from a macro end. This also helps the government to make good macro policies, just as it helps a lender to make good micro policies. And finally, the data will not be given without the permission of the borrowing company or the person who's borrowing. Now, to discuss how to go about this, I have with me people who are eminent in this subject. Sudarshan Sen, former Reserve Bank Executive Director, who knew a thing or two about the Public Credit Registry. Mr. Sharad Sharma, formerly of iSPIRT, and Sriram Kalyanaraman, formerly with the NHB. Both of them were part of a high-level committee that advised the Reserve Bank on how to create the Public Credit Registry, which the RBI had mooted in 2018. Okay, gentlemen, thank you very much for joining me today. Mr. Sen, if I may start with you. The first question is, where does the government start? Should it start by mandating all these agencies to give up their data?
Well, you know, before these agencies give up their data, so to speak. So, you know, the point is there'll be the need for many legislative changes also in enabling, I think, some of these agencies, because the scope of the NFIR, you know, mind you, it is the National Financial Information Registry, whereas earlier we were talking about, you know, a public credit registry. So clearly the ambit of information, the scope of information goes beyond just credit, but other kinds of financial information. So I think a lot of legislative changes will be needed to enable different, you know, regulatory data sets and various other data sets already in existence to mesh with the proposed database of the National Financial Information Registry.
Okay. But Mr. Sen, do you think it would have been a better idea to go with the Public Credit Registry first and then expand it to National Financial Registry? Should we still pursue the old Reserve Bank idea?
See, first of all, I think, you know, even the original recommendation, my colleagues on the panel will, you know, comment on this further. They did envisage going beyond just credit information. there to enrich the data to really enable a 360-degree view, quote unquote, of the borrower. It was envisaged that a lot of ancillary data, not necessarily pure credit data, will also be obtained. And this is going to be a mega project. It'll have to be done in stages. This is not something that we can just, do it in one stroke.
Okay.
This needs a phased implementation. It could take a fairly long period to do it, and it has to be, steady, sure and steady.
Okay. All right. Let me pursue the same line of thought, though. Mr. Kalyanaraman, do you think it should be first lodged in the Reserve Bank, only simply because it will be more doable, and then take it over to the government, when tax and other things will come in?
Absolutely. Thank you, Lada. In fact, the earlier committee's recommendation was clearly that. Because while we just said credit bureau is in the private hands, there will be a lot of resistance if there is a private. So in spite of all the data protection and data privacy policies, it gives everybody tremendous confidence if it is in the hands of a regulator, and a regulator like RBI. So what we sort of envisaged at that point in time is RBI will take the lead and control on it. And wherever it is needed, you could get technology help from the private parties where it is needed. That is the whole thing.
Okay, got it. Mr. Sharad Sharma, this, while it looks like a legal challenge, I will come to the legal challenges in a minute. It looks like a technologically daunting challenge, because everybody will have data in their own form to make all the data talk one language. Do you think that it's going to be that simple?
So let's go back to the principles. First principle: simple systems are elegant systems that follow basic principles. So why do we need this? Because there is information asymmetry. If you have a borrower, providing some information to the lender, they may not provide everything that they should be providing. So therefore, there's a case to be made that in public good, the lender should have access to some information about the borrower, whether or not the borrower wishes to disclose it or not.
Okay.
So if the borrower wishes to disclose it, RBI and other regulators together have created a wonderful system called the account aggregator, which works on a consent basis. So they can take any financial item that they have and they can share it with the lender absolutely on consent. There is no problem. So first of all, this has to be therefore focused on information that is not available perhaps on consent because it's adversarial information. And this is also important to keep in mind because, this has to conform to the Puttaswamy judgment, a 9-0 judgment, which made privacy a fundamental right and said that there are certain exceptions and it outlined those public good exceptions. So it has to conform to that because that 9-0 judgment is, I'm told by lawyers, deemed to be significant, that it will be part of the fabric of the Constitution and that cannot be overturned by law. So first is that it has to be limited to only those data sets where there is a public good being served for lending purposes, right? Because if it's anything else, the consent system of RBI itself will take care of it, right? So that's number one. Number two is that we need information for monitoring purposes. RBI has created a wonderful system, and Mr. Sen can talk more about it, called CRILIC. And the idea was that it will get CRILIC kind system will also get folded into this. And there is a case to be made that for public good purposes, better monitoring is possible. Now, the account aggregator allows for this because at the time of applying for a loan, you give an irrevocable consent for monitoring. And so therefore, if the consent is not being given, you don't give a loan, right? Or if the person is saying, I'm going to give you a revocable consent, you say your risk is higher, I'll give you a loan only at a higher interest rate. There again, for monitoring, we have to figure out what would meet the criteria of a public good, right? The last thing, which is not mentioned here and which is perhaps the most important, as we go to cash flow lending, we need to be able to report new loans or new credit instruments in a matter of seconds. Because if I'm a small MSME and I'm financing my cash flow and I've applied to many lenders today at 4 p.m. And by 4:30, one of them may have given me a loan.
Yeah.
And by the time the other lender wakes up at 5:30 or 6, it should be there in the credit registry to say that a loan has already been taken, right? So that double financing does not happen.
Yeah.
So real-time reporting is very important. So these are the basic needs that have to be met and the constraints that we have to meet them in. And I think we need a system like this, but it has to be a supplemental system to the account aggregator system rather than any kind of a replacement and so on and so forth. I have more to say on this, but I'll come back.
Yeah, because I will want to ask what will be the relation between the two. You know, there's already a CIBIL and other, credit information companies. There is already account aggregator. So how will the regulatory architecture, who reports to whom, which are the new pieces to be added, how will they talk to one another will be a question. But I think I jumped the gun. I should have asked you all first, why do we need it at all? Dr. Sen, would you want to explain? Like Mr. Sharma said, a CRILIC is already available, a database of large loans above 5 crore. So effective monitoring database is available for the Reserve Bank. Why the need for this one?
No, see, there are two databases now, which we keep talking about. One is the supervisory database, which is CRILC, which is for loans above the 5 crore threshold. Now, that has been designed with certain specific supervisory objectives in mind. It gives us a bird's eye view of, say, a systemically important borrowers borrowing from the regulated entities, right? But it does not give us information, what are the debentures that he has issued, right? Okay. What's the kind of intercorporate loans that he has taken? What's the nature of his leverage? How leveraged is he? So in order to take a credit decision, we need much more information about a borrower than just his liabilities to the regulated entities. Similarly, for the credit bureaus, again, the credit bureaus deal only with the existing liabilities to the reporting entities and the repayment history thereof, and therefore give us only a very limited picture into the borrower.
Yeah.
So for these reasons, the PCR, or now as we say, the NFIR, is an absolute must to give us all the additional data. Even today, when a banker is trying to make a loan and he looks at, say, whatever credit information he gets from CIBIL, for example, or any other credit bureau, he needs to make so many other queries of different databases independently.
Yes.
Now, the PCR, this registry is going to evade that. It's all going to be in one place.
Fair point. Got that, sirs, but you will have to hold on to it. We need to take a break on Bazaar. Our conversation with our experts on the National Financial Information Registry will continue, and you will get to hear the entire conversation by end of day after market hours. Thank you very much. It's time for Chartbusters.
Go back.